Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities. Opinions and statements of guests not affiliated with EverAg are their own and do not reflect the views of EverAg. The accuracy of their statements cannot be guaranteed by EverAg.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago home office in the Windy City. And trivia note for you, Jake, Chicago is not called the Windy City because of the wind. Okay, Jake? Maybe something to look up for future episodes. But it is a little bit windy today, but nothing too crazy. Joining me today, as always, from DFW, Texas, Director of Feed Procurement, Mr. Jake Kingsley, and making his first appearance on the Grain Feed from Arlington, Virginia, Chief Economist at the National Grain and Feed Association, Mr. Max Fisher. Team, how are we today?
We're doing well this morning, Jim.
Yeah. Doing great. Thanks, Jim.
Excellent. Absolutely. Max, thank you for joining us. It is great to have you here. You wear many hats at the NGFA. So would you mind just telling us a little bit more about yourself?
Yeah, I'd be glad to, Jim. So I've been with the National Grain and Feed Association for about 10 years. The association represents grain and feed interests for about 1,000 companies, mostly in the U.S., some Canadian companies as well. So these companies and cooperatives range in size from your mom and pops all the way up to your multinationals. So wide range of interests, all aspects of the industry, from grain elevators to ethanol producers, biodiesel producers, now renewable diesel producers, exporters, millers, you name it. So for the association, what I do, I'm their economist. I also am their specialist in transportation policy, as well as risk management policy, which means working with CME Group and the Commodity Futures Trading Commission. Also do a little bit of administrative work for the association, but that's beside the point. Before that, I worked up on Capitol Hill for Senator Pat Roberts from Kansas, former senator, I should say, when he was on the Agriculture Committee. And I also worked for USDA and originally from farm in Kansas. So that's my story.
Excellent. Okay. Great background there, Max. Awesome to have you. I'm not sure how I feel about two Kansas natives on the call here, but I think we're going to work through it. I think we also found out during intros that I have two Kansas State alum on the call as well. So things are just getting maybe a little out of hand. We'll try and keep things focused today. But real quick, we've got a lot to run through. So if we would ask Paige to kindly timestamp the broadcast. It is Thursday morning. It's about 9:45 or so Chicago time here. Just a quick look at the markets. We've got corn is actually back to unchanged at the moment. It's been a little bit choppy overnight and into the morning, but that December futures contract trading just around $4.94 per bushel. We've got wheat up just slightly, maybe up a nickel on the December contract at $5.85. We have beans that had run up higher a little bit overnight, have come back down a little bit, but Nove still holding $13 a bushel at the moment. And December meal, that stubborn little byproduct, it is back above $400 per ton. We are at $415 at the moment. It has been a big swing for protein since last week's WASDE report. So quite the move in just a 1 week's time. So keeping an eye on that protein market as always, and we'll let Jake run through that in a second. But Max, let's turn it back to you. So you said that you focus a lot on transportation within the NGFA. Would you mind telling us what's on your mind this week in the world of transportation?
Yeah, and I'll need to provide a little bit of context if I can. So if we go back, coming out of the pandemic, roughly a year and a half ago, we had all this demand, within the economy as a whole for products, and we were really jamming up our supply chain. And it was no different for grain. We had large harvests, trying to export a lot. So the railroads in particular were, they had a lot hitting them. They'd also furloughed a lot of employees during the pandemic, and they were trying to rehire and struggling with that. And anyway, so that was kind of our number one topic for our association about a year and a half ago, was just transportation availability. We were hearing from our members they just needed to move products and they just couldn't get them moved. So we worked a lot with Congress and with the regulator for the railroads in particular. They put a tremendous amount of pressure on the railroads to hire as many people as they can. The railroads, in turn, worked to try to get through these issues. And I have a, kind of a happy ending here. I don't know if we'll call it ending, but anyway, we're now like firmly out of the pandemic. Things are kind of returning to normal as far as demand for products and so forth. And also with respect to grain, I don't know if this is that great a thing, but we didn't have that large of a crop last fall, and that also helped. And I'm not going to say everything is perfect, but as far as rail transportation, things have really cooled down, to where for the most part, folks are getting their trains when they want them. And, we were kind of waiting for this fall's harvest to come in to see if the railroads be able to respond. We're starting to get some answers. This harvest is perhaps not as big as we had hoped it would be, although there is definitely more corn due to the larger acres. Anyway, so we've, as an association, we're still talking to Congress, talking to the regulators and so forth, but it's not as dire as it was a year and a half ago. I want to say that. But I will add, we're not getting very much help from Mother Nature on a river system. It's all connected, right? All the modes, whether it be rail, inland waterways, trucks. Water levels are really down on the inland water system, and we desperately need some rain to get those water levels up. And they're definitely impacting our ability to export out of the Gulf. Something that's helpful, diesel prices are down a little bit compared to where they were, say, a year ago. So that's helping too. And then just the overall reduction in demand is also helping on the trucking side to free up some capacity there. So other than what's going on in the river system, things are definitely better than they were, say, a year and a half ago in transportation.
Okay, awesome. Thank you for that, Max. Yeah, it has been a wild, well, we could just say like many years, I suppose, but it's definitely been 3.5 years plus. And like you discussed, Max, I mean, we even moved past the fact that the world essentially shut down for a bit there. But then a lot of the stuff that like Jake has had to work through on the basis side and helping our dairymen procure feed physically was that all the issues you've mentioned as well. I mean, you had the supply chains trying to get back into gear, but then you had the labor issues. You even had the federal government step in and try and manage those issues for the industries. Just a pretty wild time. So Jake definitely felt a lot of those pain points as well. And though some sides feel good, it's never totally perfect. Max, you also touched on that you focus on, risk management and representing the NGFA when it comes to, discussing with Congress, with the CFTC, how markets are managed. Do you mind just touching on that for a minute?
Yeah, I'd be happy to. So in that area, we actually have this new topic that's come up out of the Federal Reserve Bank. They've got a couple of proposals. It's aimed at the largest banks, so banks with over $100 billion in assets. So there's like 300 pages worth of rules. I definitely don't fully understand. I don't pretend to, but I know the end result, what they're aiming for, which is to require larger capital reserve requirements for these largest banks. And, as you can imagine, the largest banks are definitely unhappy about this and trying to make known all the downstream impacts on lending, money supply, the overall U.S. economy. One of those potential impacts for like agriculture, for example, aside from just whatever lending the big banks have, influence over ag, would be in the futures markets. We have these things called futures commission merchants, which, they're in between the buyers and the sellers, and they help make sure that there's, solvency. If somebody wouldn't be able to make their margin, the FCMs can step in and they bring confidence to the marketplace. Over the last 20 years, we've lost about half of what we call our FCMs. Definitely not as much availability as what there used to be. Still enough to serve the marketplace, but definitely don't want to continue losing them. Some of these remaining FCMs are associated with these largest banks, and to the extent that these largest banks have their capital requirements cut, they are going to have to make decisions as to where they can deploy their existing capital. So, it's one potential area where this action by the Federal Reserve Bank, you wouldn't think about it, but it's one area where it could potentially impact agriculture, potentially make trading costs a little more expensive. So that's one thing that we are starting to look into. Action is not expected to be taken by the Federal Reserve Bank anytime real soon. There's still about another month for associations such as ours to make comments And then hopefully the Federal Reserve Bank will learn from groups like ours who talk about the impacts on our industries, and then we'll make an informed decision as to how they roll out these new rules for the largest banks.
Okay, excellent. Thank you for that, Max. And like you said, I think Jake will hear me say when we're on like team calls, like the boring but important category that we can label an issue that comes up.
Yeah.
But one could argue very important to helping farmers managing their risk at the exchange. So, like you said, this is not necessarily a direct impact on the price of grain right now at a spot level, or necessarily even being reflected immediately at the board. But for someone who came from the bank owned FCM world, this definitely has a huge impact on the industry itself. So we think of the chain, if you will, of we've got our farmers, we've got risk managers such as Jake and myself, we've got the FCM that you introduce business to, and then those are the members at the exchange where these products are then traded, and they are there to help our farmers protect themselves and manage price risk and volatility. So maybe not front of mind or top of mind for a lot of the folks watching the show on a daily basis, but it's something to keep on the back burners because it has a massive impact potentially on ability to manage your risk on the farm. So we really appreciate all the work you and the NGFA are doing. And thank you very much for your insights today, Max. We'll turn her over to Jake to talk about those physical feed markets. Jake, a lot thrown out there from Max today. We talked about the transportation issues and how it affects your world on the physical procurement side. What else is affecting you on the physical procurement side for our dairymen here this week?
Well, I think Max touched on a very good point there. All of these different freight modes are interwoven to some degree, and like you said, the issues on the river and the lack of ability to move product down the Mississippi River to those normal export terminals is putting a little extra demand on the rail market. So even though we do have a little less expensive fuel than what we had last year, crude oil's crept up here in the last few weeks, adding a little bit of extra premium to price there. And then you're seeing this extra demand coming from what would normally be the river market into the rail market. That's adding a little bit of extra cost to shipping lanes. And so we are seeing additional premium in basis, particularly in our destination markets, our Western U.S. feed markets, some of these rail dependent places in the Southeast and South Central, seeing a little bit of a pop in basis with these higher freight costs. Now we are seeing directly reflected from the river market lower basis numbers, particularly in corn in the Midwest, places that are dependent on a average flowing river to get this product out of the way at harvest, and they can't do that. So they've got corn kind of backing up into their facilities at peak production time here, and they just can't afford to continue to stack it up. So they're bidding less and less for it to turn it a different direction. So a couple of things shaking out there. Of course, we do have harvest going on right now, and we're starting to really see yield numbers take shape. I think USDA reflected pretty well last week that the corn crop is there, and the additional acres, along with a pretty average yield. I think we're very close to the 5-year average on our yield projection at this point, are going to likely kind of put something of a ceiling to the corn market here. And we've seen that basis really drift lower as the crop has matured and everybody's really hitting their stride in harvest. The protein side's a little bit different. We're going to have some good production, but our ending stocks number is still going to be low. Again, per last week's USDA number, we're going to be somewhere very close to the 200 million bushel mark by the time this thing is all said and done. And that's a pretty lean number, especially as we watch South America continue to drag their feet in their typical planting window as they kind of wait for a good amount of rain to come from what this El Nino forecast had kind of prepped them to receive. And as they remain dry, they're kind of slow in their planting pace. And again, we're not late, but now we're 2 or 3 weeks past being early. And 2 or 3 weeks from now, we could start to feel some real concern. I don't know that we get to a panic mode at that point, but we will be heading in that direction. So the domestic market here is kind of taking shape. I don't anticipate freight continuing to be as firm into 2024 as it had been last year with high fuel prices and all the logistical challenges. Like you said, the railroad had the potential for strikes and that sort of thing. So maybe we catch a little bit of a break going into January forward there. But the next thing we'll watch is the South American weather. And I think that one will really set the tone, particularly for the protein market through the rest of this feed year.
Okay. Thank you, Jake. Yeah, there's a lot happening there, Jen. So we really appreciate both of you guys stepping up and providing those insights today. I think before we let the both of you go, I've got two just bold predictions that we're going to try and achieve here, right? There's a shout out to Phil and Kathleen and the Dairy Download podcast. They've got their bold predictions. So we've got bold prediction here too. One's going to be on the energy side. We're going to look at the crude oil market. Obviously, a ton happening globally at the moment to potentially impact the near and longer term pricing of crude oil. We've got nearby futures trading, let's say round number $88 a barrel. So Jake, bold prediction. What price do we trade first? What price do we trade first? $80 a barrel or $100 per barrel?
Ooh, that's tough. I would say for sure 90, but I think I'd also probably lean into $100 a barrel.
Oh my. Well, 90's $2 away, so that's not like a super bold. It's a bold prediction.
I think so.
So you're going with 100 versus 80. Okay, Max, what do we trade first? Crude oil futures nearby contract, $80 per barrel or $100 per barrel? Bold prediction.
Hard to go against the trend. It's been trending higher, so why not? Yeah, $100, I guess.
Okay, $100. That's right, Max. Very astute. The trend is your friend. That's what we always say, right? So don't fight it. It might be closer to get to 80 right now, only $8 away, but it does feel like if things continue to worsen, conflict continues to heighten, then maybe $100 per barrel is right around the corner. So I'm going to keep an eye on excellent bold predictions. I have one more bold prediction. It's not market focused. It's football focused. And it's the big KSU versus TCU game this weekend that, Max, you're going to. You're flying from Virginia back into Kansas. Bold prediction. Max, we'll start with you. What's going to happen in this game? TCU versus KSU. Bold prediction.
I mean, TCU had an awesome year last year, right? National title game, runners up. Great year for them. Although or am I getting that wrong? No, they were in the top 4. They weren't runners up, if I remember.
No, they were.
Oh, they were. Okay. I was, gosh.
It was a little bit of a bloodbath.
Yeah. But anyway, last year, TCU definitely has a grudge out against Kansas State. Kansas State beat them in the Big 12 title game. But I got to think, Kansas State, they're having a solid season. I'm going with Kansas State.
I love it. Stick with the home school. I love that. Jake, bold prediction, TCU at KSU.
I agree with Max here. K-State by 10.
Oh, we're putting a score on it. We're putting a score on it.
Cats by 90, as the kids say.
As the kids say. Well done, Jake. Jake, maybe who's a bigger fan? Max is flying from Virginia to Kansas. You're not that far away. What are you, in Texas?
I'm in Texas. It's a pretty good drive. Hey, I went to both games last year.
Oh, okay. Okay, gotcha. Okay, good. All right. So dedicated fan base here at EverAg and the NGFA to KSU. Well done, gentlemen. Thank you for those bold predictions, and thank you for being here on the show today. Always fun. And Max, thanks for being a good sport. Really appreciate you and your insights here at the show today. We'd also like to thank Corey and the EverAg Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. See you next time on the Grain Feed.